Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICI. Today's evening, we are going to learn on this topic called time of supply under GST. Before we start our discussion, as a protocol, people who are watching me live, please let me know you're able to hear my audio and also you're able to see my presentation. Once we receive a confirmation, we will go ahead with our today's discussion. Good evening, Viraj. Good evening, Namrata. Hope you're able to hear my audio and you're able to see my presentation. Please confirm it. Once I get a confirmation from some of you, we will go ahead with our discussion. And hope you had a recap of our previous class, that is with respect to time of place of supply for domestic transaction, place of supply for international export-import related transaction. Thanks for the confirmation, Jana. And yes, let's start with our today's discussion. So today, I'll make you to understand with respect to the aspects connected with the time of supply. I'll give you a couple of examples, why we have to study time of supply, how we apply these provisions, when we do our internal audit, when we do statutory audit, when we do GST audit, what aspects we have to take care in relation to these provisions connected on time of supply. Also, I'll make you to go through some of definitions in relation to goods and services, which will help for us to understand on time of supply. Before we commence with time of supply, we will just have a quick recap of our previous class, that is in relation to place of supply. Place of supply, we have section 10 with respect to domestic supply of goods. We had section 11, which deals with your import and exports. So section 11, which is a very short section, it says that importer will be identified as the person who has imported the goods, and that place where the import is located, that shall be place of supply. In relation to exports, with its cognitive expression, when the goods are taken out of India, when goods are taken outside India, that shall be called as my place of supply. This is a very short provision which deals with your cross-border transactions. Then we have section 13, which deals with your services. Section 13, which deals with your services. Under section 13, we have, let me come to our new screen. Yeah. Section 13. This has got a list of description or list of services identified right from section 13, subsection 3 to section 13, subsection 13. These are the provisions we have which explain in general with reference to a specific description. Out of this, 13th is a general provision. We can assume subsection 3 to subsection 12. Section 13, subsection 2 is a general rule. If you don't find an answer, with respect to place of supply, for any of the descriptions which you refer from subsection 3 to subsection 12, they say, identify the place of supply as a recipient of service. Identify the place of supply as recipient of service, where address exists on records. Wherever the address doesn't exist, then the place of supply shall be location of supplier. Where address on record doesn't exist, location of supplier. When we discussed on this particular provision, I gave one example. For a moment, let's assume that there is a chartered accountant who takes online classes. Say, for a moment, some of you who is very good in accounting, you can make the accounting subject very, very interesting for basic beginners or people who wanted to pursue a career in accounts. When you take up online classes through Facebook, through LinkedIn, you get this leads. And the students who are interested to join your batches, they make an online payment. They make an online payment. Now, when you receive this money, there's a possibility that the customers could be from India, the customers could be from overseas. When you don't have address on record, either of section 12 or section of 13 says, identify the location of supplier. This happens to be my place of supply. So if you are a chartered accountant, you're entering online classes, you receive a sum of rupees 10,000 and you don't have address of your recipient. You don't know whether the customer is in India or outside India. You consider place of supply as your own place. This is a provision which is connected with general rule. Now, from here, we move on to the further provisions, which is connected with section 13, subsection 3. This talks about category of services where performance is placed. Performance on goods or individual services. So we have discussed where the goods are made physically available to the service provider for rendering services. That point in time, this provision says that where the goods are physically available, that shall be my place of supply. One example we have discussed with respect to this case, where the goods have been brought into India post-sale. Where once I make a supply, if there is a warranty period, I have to do a repair activity on particular goods imported into India. Also, we have discussed the services electronically performed. Like we do a troubleshooting, we do some sort of guidance, etc. over email or over internet. So when we do electronically, the location where goods are available, that shall be my place of supply. In case of individual services, where the person has to come in person for getting the services, the place where the performance is done, that should be my place of supply. We have discussed the example of this celebrity. A celebrity goes abroad for a particular surgery and claims that as a expense in his P&L account. When I say it is a expense in my P&L account and there is a disclosure for money spent in foreign currency, there could be a demand for payment of reverse charge. That point in time, when I say import of service, my place of supply should be in India. When the place of supply happens to be overseas as per section 13, subsection 3, I need not pay any IGST on reverse charge basis. Also, we have discussed one important point called goods temporarily imported. Goods temporarily imported into India for repair purpose. So in case goods are imported for temporarily, then these provisions of section 13, subsection 3 are not applicable. One condition is these goods should not be put to use in India. Put to use in India. If the goods are put to use in India, then I have to apply these particular provisions as if the performance is done in India. This is in relation to section 13, subsection 3. Then moving further, section 13, subsection 4. We had discussed in relation to services of immobile property. As we have read section 12, subsection 13, where the immobile property is located or intended to be located, that shall be my place of supply. Then we have section 13, subsection 5. This provision deals with your activities connected with admission or organizing. Admission or organizing events. So in this case, they say where the event is conducted, that shall be my place of supply. Where the admissions are conducted. I gave an example of IMTA. This is Indian Manufacturing Trade Association, where Maharashtra, they conduct the event. Every year, a particular state they will choose. If there is a trade fair, say one of the party from Russia comes all over India to participate in a trade exhibition. So from IMTA point of view, service provider is in Maharashtra. Service recipient, now because this admission is being conducted in India, Maharashtra happens to be my place of supply. Though the payment comes from overseas, though customer is from Russia, I will have to charge SGST, CGST, Maharashtra. This is what we have discussed. Moving further, in case if this admission or event is conducted in places like multiple places, like say some parts of states, some part of union territory, some parts in non-taxable territory. When I have multiple permutations and combinations, this provision says that presume that the services are the place of supply shall be taxable territory. Even 1% or even one occasion, one of the performance happens to be taxable territory. By place of supply, it's deemed to be in taxable territory. I repeat, as a part of organizing events, admission, etc., I perform any of the event out of India and in India. So any event which is happening in India, that should be presumed that the place of supply happens to be in India. So even though it is a non-taxable territory, I have to consider the location of service provider as my place of supply. This is what we have discussed in 13.5. Then section 13, subsection 8, which deals with your intermediary services. One of them is banking service. I gave example of a Singapore entity where a bank guarantee has to be given by State Bank of India. This is what we have discussed in subsection 8, clause 1. Then we have discussed in relation to intermediary. Intermediary, where this particular person is located, that shall be my place of supply. One of student asked in the previous class, she was asking about Ola, Uber, can we call them as intermediary? Intermediary is an agent, is a broker between the main supplier and recipient. A person who is representing, who is acting as a middleman, like an agent, can be called as intermediary. Ola, Uber are not intermediary because they are called as e-commerce operators. E-commerce operators. Also, we have studied something called financial institutions, non-banking financial institutions. Then we had section 13, subsection 9, with respect to transportation of goods. In case of transportation of goods, we have discussed that where the destination is there, that should be my place of supply. Then moving on, section 13, subsection 10, with respect to passenger transport services. Where the passenger embarks on a particular journey, that we call as a place of supply. Then section 13, subsection 11, services on board. Section 13, subsection 11. Services on board. Services on board. So generally, either under subsection 12 or subsection 13, they say first schedule point of departure, that shall be considered as my place of supply. Then last but not the least, we had this services of OIDAR. Section 13, subsection 12. Activities in relation to online database access retrieval services. I have mentioned that this particular definition has been undergone change from next attempt, that is May 2024. They're going to study a new definition, non-taxable online recipient and OIDAR definition. For that reason, this attempt, November 2023, please expect one question. This is just a broad view of our provisions connected with section 13. What we will do, let's take a couple of questions in relation to this piece of supply. Then we will come to time of supply. Hope the Word document is visible, student. Please confirm. Let's start with our questions in relation to section 13. First question. Mrs. ABC and Co., a registered person in Tamil Nadu, have supplied a machinery during 2020 to their customer, Mrs. Zin and Co. in Tokyo. The machinery has a warranty of 18 months and on account of a complaint received from the customer, the above machinery has been imported into India for refurbishment. Examine the place of supply of services performed by Mrs. ABC and Co. Mrs. ABC and Co. Now, here they are saying that a machinery was sold by a registered person in Tamil Nadu. This machinery which was sold to a customer in Tokyo, it has come back to India for the purpose of refurbishment. So when you read provisions of section 13, what would be answer? What would be a place of supply? Will it be Tamil Nadu, where the registered person is located? Will it be Tokyo, that is out of India, or none of the above? What would be your answer? Carefully examine the provisions. Don't be in a hurry to jump to answer. Examine your provisions and then answer. Janaki says, see none of the above as temporarily imported. If it is temporarily imported, what would be your answer, ma? Please think. Please think, Janaki. Don't be in a hurry. Janaki says out of India. If section 13, okay, let me wait for your answer. Janaki, please examine what provision is not applicable. If that is not applicable, what is applicable? Kaushik says, where intended to be used. This has come to India for the purpose of repair activity. After repair, it is going to go back to the customer. Kaushik. Mukesh says C. Why C? None of the above. Please give a justification, ma, so that we can understand the concepts in a proper manner. Good. Now, look at this way. This first question to all of us. This particular machinery which is coming to India, it is called as an import. Now, why is this machinery coming to India? For the purpose of repair. What will happen after the repair? This seller, ABC and Co., will he retain that machinery with him? Answer is no. Because he's receiving it for repair, he's going to send it back. Now, look at your section 13, subsection 3. It says that services supplied in respect of goods which are required to be made physically available by the recipient of service to the supplier of service. So here, Zing and Co. is making physically available the machinery to Mrs. ABC and Co. Let's read further. Look at the second provision. Provided further that nothing contained in this clause shall apply in the case of services supplied in respect of goods which are temporarily imported into India for repairs and exported after repairs without being put to any other use in India other than which is required for such repairs. So here, it has come to India temporarily. It is not going to be retained in India. So if it is going to go back out of India, then provisions of section 13, subsection 3 is not applicable. When that specific provision, subsection 3 is not applicable, I'll go back to general rule that is under subsection 2. Under subsection 2, what it says, the place of supply shall be location of recipient, where the services, supply of services, except the services in so and so. Location of recipient of service is not available. Then I'll go to the location of supplier. In this case, when I receive the machinery, my location of recipient Tokyo is available, right? So in that case, I'll apply provisions of section 13, subsection 2. Location of recipient. Location of recipient. Now, location of recipient is outside India. Location of recipient is outside India. Accordingly, answer is clause number B. Clause number B. Let me see if you have any doubts. Janaki says 13.3 is not applying. Yeah, that's what I was saying, Janaki. If 13.3 is not applicable, we have to be a little more cautious. And Sriram has given a fantastic answer outside India to the recipient, place of supplies, location of the recipient. Accordingly, it is clause B. Absolutely correct, Sriram. For the benefit of other students, I'll just read what Sriram has written. He says, clause, for the question number 1, B is the answer out of India. He says, as per section 13, subsection 3, goods are imported into India for temporary repair purpose and After that, sent to outside India to the recipient place. The place of supply is the location of the recipient. If the goods are not put to use in India. Now, this is a reasoning which will explain you to put your answer in a proper track. This sort of reasoning definitely will help you in your examination. And I bring to your knowledge, please try to bring the logical reasoning. If you don't remember section 13, if you don't remember, say subsection 2, you can say as per the provisions of IGST, as per the provisions of section 13 of IGST. That is good enough. No need to quote subsection 2, clause 1, clause B. All these things you can keep silence on that. Viraj says 13.5 multiple places. No, Viraj, it is not multiple places. Section 11, export out of India. When I send the goods out of India, there's one notification, 105, which we have studied. I'll explain in the customs provision, Viraj. For this question, answer is clause number B. Hope all of you have understood the reasoning. Now, let's look at question number 2. Mrs. ABC Limited, a registered person in Madhya Pradesh, have purchased goods from Mrs. International Suppliers, a registered person in Delhi. So, ABC Limited, registered in Madhya Pradesh, International Suppliers, registered in Delhi. By way of exchange of title to goods while they are in transit from Namibia and before they enter in the Indian territorial waters. So, here, this is a high sea sale transaction. So there is a seller called International Suppliers. There is a buyer called Mrs. ABC Limited. So here, the sale happened by way of exchange of title to the goods, where the goods are coming from an outside country called Namibia. Before the goods have hit Indian territorial waters, the title of goods has been exchanged. So in this case, they're asking us, examine the place of supply. Will it be Madhya Pradesh because ABC Limited is from Madhya Pradesh? Will it be International Suppliers, that is Delhi because seller is from Delhi? Or will it be outside India? What will be your place of supply? What will be your place of supply? Yes, Shriram, I got your point. I'll explain this. Virat says Madhya Pradesh. Okay. Viraj, if possible, always justify your answer as per which provision, why this place of supply happens to be Madhya Pradesh. Students, do all sort of R&D right now. Examination, don't go with a confusion. Tirupati says Madhya Pradesh. Jahanavi says outside India. Okay. Let's wait for another 2 more answers. Srinidhi says outside India. Okay. Kaushik says maybe A as per destination based taxation. Okay. Janaki says place of supply will be outside India as goods not entered into territorial waters. Fantastic. Sriram says Madhya Pradesh as per the relevant provisions of IGST. Since both the persons are registered in India, place of supply shall be location of the recipient, even though the goods are sold by title or deed outside India. Hence, place of supply shall be Madhya Pradesh. Okay, now good. Let's look at this this way. Now, first and foremost, I draw your attention to provisions of Schedule 3. Provisions of Schedule 3, which deals with neither supply of goods nor supply of services. Neither supply of goods nor supply of services. Right? So this Schedule 3 has an entry called clause number 8, where they say any supply of goods between two persons, where the goods are, the transfer of title in the goods happen before they cross territorial waters, shall be not considered as supply of goods nor supply of services. Schedule 3 comes into rescue. So for a moment, International Supplies sells the goods to Mrs. ABC Limited for 10 lakhs. When this seller, International Supplies, have to file their GST returns, they report this 10 lakhs in table number 8, saying that this is non-GST supply. Why? As per Schedule 3 of CGST Act, entry number 8, it says that it is neither supply of goods nor supply of services. This is the first point we need to have a clarity. Next, second point. We have read provisions of Section 7 and Section 8 of IGST. Now, when we read these provisions of Section 7 and Section 8, Section 7 deals with interstate supply. Section 8 deals with your intrastate supply. Intrastate supply. Now, when I say intrastate supply, it says that whenever the seller is in one state, the place of supply is also in the same state. I can call that as a intrastate supply. Now, in this case, when the goods doesn't even cross territorial waters, they cannot be said to be a intrastate supply. Now, also you look at this problem. One buyer is in Madhya Pradesh, seller is in Delhi. The goods are in outside India. You remember this Article 269, which I have explained in the first class. In relation to goods imported into India, in relation to goods exported out of India, the place of supply shall be considered as interstate supply. So here, Section 8 fails for the reason goods are coming into India. For that reason, we call that as a interstate supply. So point number 1, it is not a intrastate supply. Reason, the goods are coming out of India into India. Then we call this as a import, which is called interstate supply. Now, when I say interstate supply, it is not guaranteed that it should be always identified to a state in India. Now here, till the goods cross customs waters, it will be called as goods are outside India. Once the goods cross Indian territorial waters, the customs area where the goods are located, that will be identified as your place. Since the goods have not crossed territorial waters, answer for this question will be outside India. So here we call this as a interstate supply. So answer would be interstate supply, and I would call place of supply as outside India. Outside India. This is answer, clause number C. Hope this is clear for all of you. There's one question from Sriram. Sriram, let me see if question number 2, if you have any doubt, let me just see. Then I'll come back to question asked by Sriram. All of you, whoever have said Madhya Pradesh, whoever have said Delhi, hope you have got the answer why it is outside India. Great. So first of all, now Sriram is asking this question. Sir, in question number 1, if you say provisions of section 13 subsection 3 is not applicable, please explain how 13(2) is applicable. Now, please understand, students, carefully. Ideally, when a service is performed on goods, section 13 subsection 3 performance based gets triggered. But because of second provision, where they say, if goods are temporarily brought into India, goods are not to be retained in India, then the place of supply will not be 13 subsection 3. When I don't find an answer in 13 subsection 3, none of other subsections, right, 4, 5, 6, till 12, have their entry in relation to this performance. So what I will do, I'll go to the general rule. Whenever I go to a general rule says, location of recipient, if it is available, that is my place of supply. So what if my location of recipient is not available, then location of service provider will be my place of supply. In this case, in this given problem, I have my customer called Mrs. Zing and Co. from Tokyo. So when I have this bill of entry, in bill of entry, I'll say the delivery challan or an invoice or any other document, maybe a commercial invoice, which comes from Zing and Co. It indicates that this plant and machinery is from Zing and Co. in Tokyo. Because the identity is available on records, I fall back to section 13, subsection 2. There, I'll say the place of supply will be of recipient. Here, the recipient is Zing and Co. That's why Tokyo would be my answer. That is Order of India. Hope, Shriram, this is clear, ma? Enter number for clause number 1. Now, let's move on to question number 3. Question number 3. Import of goods into India for testing purpose and return back thereafter to the place of origin shall be considered as import of goods, not import of goods, none of the above. Very simple, but logical connected with the question number 1. Read carefully. Import of goods into India for testing purpose and return back thereafter to the place of origin shall be considered as import of goods, not import of goods, none of above. This is set in the backdrop of section 11, read with section 13. I wanted to connect both the provisions for your better understanding. Think carefully. Don't be in a hurry. Indicate as per which provision you are concluding this point. Quick. Import of goods into India for testing purpose and return back thereafter to the place of origin shall be considered as import of goods, not import of goods, none of the above. At times, when we don't have an answer, please go with your common sense. Logic always is helpful to give a reasoning. So when we really don't know the provisions, apply common sense. When I right or wrong, go with your instinct. Srini, this is import of goods. Sriram says not import of goods, since the goods are not put to use in India. Janaki says import of goods. Janaki says not import of goods, as it is sent back. Sriram and Janaki have the same reasoning. Okay, I'll explain this to students. See here, import of goods into India for testing purpose and return back thereafter to the place of origin. Now, when the goods come into India, first and foremost, it will be called as import of goods. Now, when I export back, I have to export back because it is meant for return back after repair. Now, please look at this problem this way. Every transaction has to be looked independently into various series of steps. Now, for a moment, you're not a student pursuing your CA career. You happen to be an assessing authority at customs place. Now, when the goods get into the customs territorial waters, customs station, may happen, may not happen. Now, you have to have the formalities where you will say, file your bill of entry. Without filing bill of entry, I'll not permit the goods to come into domestic tariff area. Isn't it logical? When I say I'll file my bill of entry, the next question comes. The customs officer will say, Praveen, pay the customs duty. Once you pay the customs duty, you can take the goods into your domestic tariff area. Then I'll come to this exemption notification, 108 of 95, where I'll say, my dear officer, look, this is my original invoice. The goods have come for repair. After repair, I'm going to send back. Then customs officer will say, okay, since there is a notification you're referring, I'll do one thing. In the bill of entry, I'll show this is import. I'll say that this is subject to conditions. What are the conditions? Within a span of 3 months, within a span of 6 months, you have to send back the goods out of India. So when you break into various steps as a customs officer, unless a bill of entry is filed, you will not permit these goods into get into the domestic tariff area, right? So accordingly, the point will be irrespective of whether it is going back or not, we will call this as import of goods. We will call this as import of goods. We cannot call this as not import of goods because for customs purpose, read your provisions of section 10. Unless I go to, section 11, I as an importer, I have to go to the customs authorities and say, my dear officer, I am the identity of this particular repair, the person who can conduct a repair activity. So I'm representing to the customs officer as an importer. So when the goods have come into India, I call that as import of goods. Nevertheless, I do a repair, I send back. Then I call that as export of goods. So identity for import, identity for export, both are going to be in two different footings. So answer here, I have to declare as import of goods. Hope this explanation is clear for all of you. Viditi says B. Virat says not import of goods. Tirupati says as per 11, bringing goods into India is considered as import of goods. Now look at this point. Like Tirupati has given his answer as per section 11. Bringing goods into India is considered as import of goods. That is good enough. For a moment, assuming this is for 3 marks, examination, final, never expect, always expect the unexpected. This question itself will be tested for 3 marks. No one knows. So here, when I look at this, every step is important. Because the goods have come into India, bill of entry has to be filed. Because bill of entry has to be filed, identity of importer is required. Because identity of importer comes into picture, section 11 comes into picture. So accordingly, answer would be import of goods. Then moving further. Mrs. Happy Tours, a registered person in Gujarat, have rendered services to Mr. A, who is a resident in London. This service provider is from Gujarat and Mr. A happens to be a customer from London. For organizing Bharat Darshan and education trip as a tour operator. Part of this trip, Mr. A shall be visiting 10 states in India. Then the place of supply shall be location of service provider, location of service recipient, on the basis of identification of time spent in each of the state. So look at this problem carefully. Should I apply section 12? Should I apply section 13? When you say section 12, what is the logic? When I apply section 13, what is the logic? Under that, what subsection is relevant for me? Look at your institute material. No hard and fast rule. Read the provisions of 12. Read the provisions of 13. Carefully give your answer. Carefully give your answer. And I'm going little slow for the reason examination you have to bring your answer with the interpretation, with the reasoning in this fashion. Good. I can see Kaushiki gave her answer. complete your answer, Kaushiki. It is partly correct. Okay. You have given the conclusion also. Okay. Good. 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 I got your point, Kaushiki. Very good. Janaki says 13.5. Kaushiki says C. Okay. As per 13.7. Okay. Janaki, answer, ma. You have given the provision. You have given the reasoning. Answer is missing, Janaki. Namrata says C. Yes. I'll wait for one or two further answers and then we'll discuss. Answer is missing, Janaki. You have given the provisions correctly, but answer is missing. Janaki says option C. Virat says C. Janaki says C, and Tirupati also says 13.5 p.m. This problem, all of you have got the answer correct. Now, whenever you are giving an answer, you will say service provider, service recipient. Now, here in this given problem, service provider in India, service recipient is outside India. Accordingly, when I look into these two provisions, I'll say provisions of section 13 is applicable. So you'll say section 13 is applicable. Under section 13, what is applicable? Subsection 5, organizing event. When I do organizing event, in this case, this event when is performed, the state or union territory where the performance happens in taxable territory. If the event is happening outside taxable territory, that shall be my place of supply. If this event is conducted or this particular tour is conducted partly in India, partly outside India, then it is deemed to be a in taxable territory. Because entire trip is within the taxable territory, this I appropriate as per the provisions of subsection 7, where all the states where the kind of time spent as per the generally accepted accounting principles, I allocate among all the states. So for this question, answer is C. Answer is C. Examination. Please put your reasoning this way. Because one of the parties outside India, section 13 is applicable. Under that, this particular provision is applicable because the event is being performed. Now, assuming 3 months, all these provisions, if you can elaborate, you'll fetch entire 3 months. Now, last question for the day. Mrs. XYZ and Co., a firm of architects, registered person in Karnataka, have provided structural designs to Mr. A, a resident of Tamil Nadu, in relation to a proposed project under construction in Washington. Place of supply in this case shall be Karnataka, because the service provider is an architect from Karnataka, or Tamil Nadu, because my recipient, my customer is from Tamil Nadu, or C, outside India. What would be your answer? XYZ and Co., a firm of architect, registered person in Karnataka, have provided structural designs to Mr. A, who is a resident of Tamil Nadu, in relation to a proposed project under construction in Washington. Place of supply in this case shall be Karnataka, because the service provider is from Karnataka, or Tamil Nadu, because the recipient is from Tamil Nadu, all together outside India. Janvi says Tamil Nadu. Look at provisions, Janvi. Janaki says property is located outside India. Place of supply will be as per 13.4. What is the answer, Janaki? Namrata says C, because location of removed property. Yes. Shriram says question number 4. If the recipient comes to visit India on a tourism purpose, in the proportion of instance, Shriram, your reasoning is absolutely correct. Once I discuss this question number 5, for the benefit of other students, I'll elaborate once again. But your understanding is completely perfect, Shriram. Virat says C, outside India. Kaushik also says 5C, section 13, not apply both in India. So, Kaushiki, re-examine your answer. You are saying that section 13 not applicable as both are in India. So section 12, 2, place of supply, place of, oh, good. Different dimension, very, very unique thought process. Okay. Tirupati says 12, 3, since immovable property is located outside India, places of outside India, recipient. Perfect. This is a, now I'll take it this way. Service provider, service recipient. Now, service provider is in Karnataka. Service recipient is in Tamil Nadu. Now, when both are in India, can I call this as section 13 or section 12? When service provider and service recipient is in India, section 12 is applicable or section 13 is applicable? People have quoted section 13. People have quoted section 13. For you, when you solve a problem, don't take for granted reading the problem. Write your answer, make a structured presentation. When I say make a structured presentation, imagine yourself as a architect, like when you have to give a design, when you have to give a plan, put all possible things in a place, black and white. As per this, so and so, this is my answer. For a moment, I'll just give an example of Vishwakarma from Ramayana. Now, most of us have known this episode where this Lanka visit to Lanka by Lord Hanuman. When Hanuman visits Lanka to meet Sita Devi, he happens to meet this Ravan also. When Ravan, out of his furiousness, he puts fire to the tail of this Lord Hanuman. He starts putting fire across Lanka. He burns Lanka and goes back to meet Sri Ram. Now, once this guy, Hanuman leaves this Lanka, there's a person called Vishwakarma. Vishwakarma is a well-known architect who created Lanka. When I talk about this gentleman Vishwakarma, he gives, there was one of episode when you read Ramayana where he beautifully explains, like when Vishwakarma is explaining to Ravan how his kingdom should be presented. He makes a visual impact to Ravan how this kingdom should be presented. So like Vishwakarma, your problems, be it accounting, be it taxation, be it law, be it your auditing, anything, present your answer in a detailed manner with a given information. So once you put it in black and white, your assumptions may be right, may be wrong, get to know only looking at your black and white. So here, because both the people are in India, that is taxable territory, provisions of section 12 gets applied. And in relation to section 12, I have subsection 3, which deals with your immovable property. When I talk about immovable property, it says the place of supply shall be location where such property is located or intended to be located. Now here, this property is intended to be located in Washington. So accordingly, my place of supply happens to be Washington. That is outside India. Now, for a moment, all of you, if you give an answer C, it could be correct. But instead of giving 12 subsection 3, if you have given 13 subsection 4, then though your answer is correct, out of 3 marks, 2 marks will be deducted, or at times some of the examiner won't even give a mark. If some examiners are kind enough, they'll say, though you have quoted section 13, because answer is correct, let me give 1 mark out of 3 marks. There are few examiners who will say, no, the fundamental concept itself is wrong. Though answer is correct, I will not give any marks. And the value of 1 mark, ask a student to score 39, where 40 is the pass mark. Ask a student to score 49, where I have to get 50 as an aggregate. Ask that student who got 59, where I should have got 60 per exemption. So examination, don't let the examiner to deduct even 1 mark. So accordingly, answer would be provisions of section 12, subsection 3. Answer is C. I completely agree. Answer is C. Now, before we go back, Sriram has asked one interesting question. I'll just read that question for benefit of all of you. So Sriram is asking this point in question number 4. In question number 4, where we were talking about this tourism case. So he says, in case of question number 4, where this tourist has come to India, when tourist has come to India for tourism purpose, places a place proportionate to the states. For a moment, the service provider is in Gujarat. So if the tourist stays in Gujarat, say he has to visit Ayodhya. So what will be the place of supply? Like when I have, say, 9 states other than Gujarat, and one of the state happens to be Gujarat. Will the service provider charge SGST, CGST, Gujarat, or how? Will in all other 9 states can he call IGST, and only for this state can he call SGST, CGST? Answer is perfect yes. So here, when this service provider, Mrs. Happy Tours, have to raise invoice, he mentions in detail, look, I have received a remuneration of 10 lakhs. This 10 lakhs, like state 1, state 2, state 3, union territory 1, union territory 2, and goes on till, say, 10th state. One of that state, he says, say Gujarat. Because places are played service providers in Gujarat, SGST, CGST come. Balance all will come as IGST. So when I fill my GST at 3B, in 3.1, everything I'll show as IGST. Because it is a B2C supply, in table number 3.2, again, all 9 states I'll show in respect to taxable value and IGST I'll be mentioning over there. So this is the importance of a problem where I have both place of supplies applying provisions of section 13. So answer to your question, Shriram, your reasoning is correct. Now let's come back to our today's discussion called time of supply. Now, before we start with this topic called time of supply, I'll just give you one backdrop. Okay. Namrata says, I got 59 in last question paper. I was not able to get exemption. So the value of 1 mark is very important. Let's focus not to leave any mark to the examiner. Janavi says, in last question, according to Provision 212.3, in case of immovable properties outside India, place of supply should be recipient of service. So it should be Tamil Nadu. Okay. Good. Now, for a moment, I'll just take one more moment. Now, look at your very interesting point. Janavi says, provided that if the location of immovable property or boat or vessel is located outside India, place of supply shall be location of the recipient. Now, this is one good point. I too missed out this point. Thanks for bringing this point, Janavi. I'll just come back to this last question. This I do missed out, Janavi. I do acknowledge your point. I'll just read what Janavi says. In relation to section 12, subsection 3, please look at your institute material. If the location of the immovable property or boat or vessel is located outside India, intended to be outside India, place of supply shall be location of the recipient. So in this case, I do consider, they say the place of supply shall be location of the recipient. I do correct my answer. Sorry for the hurry. Location of the recipient. This is as per section 12, subsection 3. Section 12, subsection 3. Provided that if the location of the immovable property or boat or vessel is located or intended to be located outside India, place of supply shall be location of the recipient. So here, my location of recipient happens to be Tamil Nadu. So accordingly, location of recipient shall be Tamil Nadu. So answer for this, instead of outside India, I see this to be Tamil Nadu. It has to be Tamil Nadu. So here, because service provider is in India, service recipient is in India, when we read this organizing tour, etc., like when the tour is conducted outside India, they presume that the place of supply happens to be location of the recipient. So like Sriram was asking this question, when we have the tourist who comes out of India, for a moment, Indian tourist goes out of India. In those cases, we read section 12, subsection 7, where we say location of the recipient. Same logic gets applied over here also. And our answer has to be Tamil Nadu instead of outside India. Janani, thanks for bringing to my notice, ma'am. Now, let's come to my time of supply. When we talk about time of supply, I don't know how many of you have dealt with GST annual returns. So when I look into GST annual returns, GSTR 9, GSTR 9C, there's a table called, I'll just come to a fresh slide. In GSTR 9C, table number 5, we do a turnover reconciliation. When we do this turnover reconciliation, we will say turnover as per financials. So we will start with turnover as per financials. We will add few items. We will deduct few items. Then finally, we will land up with turnover as per GSTR 9. Now, turnover as per GSTR 9, this is on the basis of GSTR 1. So here, when we do this reconciliation, we are trying to explain to the GST officer that there is a accounting standards which is there for my financial statements. When you prepare financials for income tax purpose or maybe ROC purpose, maybe trust, non-profit organization, or whatever be the reasons, there are various accounting standards are guiding factors. Now, when I prepare for GSTR 9, there's a different turnover. Now, this difference is prima facie erased because of your time of supply provisions. Because of this time of supply provisions, I have a difference. For example, advances received. On advances in relation to services, I have to pay my GST. Second, sale on CAF basis. Now, what we do, unless the ownership is transferred to the customer as per accounting standard 9, I wouldn't recognize my turnover for financials. But for GST purpose, the moment the goods are taken outside the factory, I considered it for GST payment purpose. So these are a couple of reasons which are connected with my time of supply provisions. So this time of supply, I take it up for the purpose of my turnover reconciliation. This is one of the factor. Read with, there is one more provision called section 15, which deals with your valuation. Both the topics which are earmarked for today and the next class, these two topics explain why there is a difference between my financials and my GST returns. This is what I am going to explain in this written in a simple fashion. When we look at my books of accounts, revenue recognition is on the basis of CAF or FOB for my accounting standard point of view. But for GST, the moment goods are removed out of factory, I have to consider it for my GST purpose. Next, sale on approval basis. There could be cases where I could have sent goods on sale on approval basis. Unless the approval receives, I wouldn't consider as a turnover. But for GST, the moment there is a time limit of 6 months. If the goods are sent out beyond 6 months, I have to consider that as a supply under GST. But for accounting provisions, that is your books of accounts, unless the approval is received, could be 6 months, could be 9 months, could be 1 year. I don't call that as a revenue. Unbilled revenue for services. Now, we have this concept called unbilled revenue, goods in transit, which we call for goods. In case of service sector, whatever service rendered, which was not billed to my customer, I call that as an unbilled revenue. This goes and sits in my financials as my income. But for the purpose of GST, I don't disclose unbilled revenue. This is another one reason. On the other hand, when we look from GST point of view, there are supplies between distinct persons. That means to say stock transfer, branch transfer. For the purpose of GST, section 25, wherever there is a movement of goods from one particular state to another state, read with schedule number 1. In schedule number 1, where there is a supply of goods or services without consideration. As per schedule number 1, any movement of goods between distinct persons, I call that as a supply. But for the purpose of my books, I never consider that as my turnover. I don't know how many of you have focused on this multi-location register person. If you have done a statutory audit, the first aspect when you finalize your books of accounts, what you do is, you will take state-wise the turnover as per GST. You will eliminate inter-unit stock transfer. In the same way, in the purchases, you will take the purchases of individual trial balance. From that, you will eliminate the stock transfer from one branch to another branch. Now, the turnover on one hand, the purchases on other hand. Both should reconcile. That's called your inter-state or inter-unit reconciliation. So, from head office, 10 goods have been dispatched to branch. Now, if branch has accounted only 8 goods, the balance to becomes an unreconciled item. Money payable in one branch, money receivable in another branch. Next, tax payment on advances for services. Under financials, my regular books of accounts. For a moment, if I assuming for a moment, this is a works contractor. Every works contractor, when they sign a contract, they say, please pay 10% down payment or advance. When I receive advance, in my financials, I show in my current liability, money received in advance. I never park in my P&L account the moment advance is received. But for GST, what will I do? I pay my GST on advances. This is as per provisions of section 13, time of supply, which I am going to explain in a short while. Adjustment of value of supply because of section 15. This deals with your valuation. The valuation, when I explain in detail, there are few elements which are added back for the purpose of computation of GST. Like example, free supplies. Now, I am a manufacturer. There are few goods which are given by my customer for the purpose of my manufacturing activity. For example, there is a raw material which is one of the component which is required for my manufacturing activity. When raw material is given as a free supply, consideration is paid by the customer directly to the third party. That is particular aspect I have to add back. So when I deal with section 15, I'll give explanation where my financials don't show as a turnover, but for GST, it gets added as my turnover. Last, deemed supply. Deemed supply, which deals with your job work transactions. It deals with your job work transactions. Now, there is a time limit. There is a time limit under GST law saying that for raw materials, 1 year, for capital goods, 3 years. So when I send my raw materials to job worker, Within 1 year, those raw material have to come back. If the raw material is not received back within 1 year, then it is called as deemed supply. It is called as deemed supply. Deemed supply. If this is a deemed supply, I charge GST, I pay GST. But for the purpose of books, I never consider that as my turnover. Last, grace period for issuing a tax invoice. Now, for the purpose of revenue recognition, I have to raise invoice the moment provision of services is completed. Now, we talk about the principle of accrual. But for the purpose of GST, section 31, which deals with tax invoice, there is a 30 days point in time given for raising a tax invoice for services. So, I could make a provision accrual entry in my financials, but actual tax invoice I'll raise on from the date of provision of service within a span of 30 days. Now, this is one mechanism which helps me to save my GST, which also helps me for TDS purpose, for income tax purpose. Now, how we use, when we get into specific aspects, we will understand how this 30 days cushion period can be used in your day-to-day business activity. To start with, when we read with this topic called time of supply, these are various reasons why time of supply comes into picture, why there is a difference in my books, there is a difference in my GST returns. This is an overview. When we read time of supply, I have to read a couple of definitions which explains me the importance of this aspect called time of supply for some business aspects. This time of supply, I have to read with an element called issuance of a tax invoice as per section 31, read with rule 46. When we talk about tax invoice, this is nothing but a document which is prescribed for time of supply purpose. This section 31 relates or depends on detailed explanation in rule number 46, where we have a reference to disclosure of elements of a tax invoice. From there, this time of supply helps us to keep us in compliance with payment of taxes. We refer to section 49, which deals with your payment of taxes. Whenever we file our returns, my payment of taxes happen, where my payment of tax may happen through electronic credit ledger, through electronic cash ledger. This is my credit ledger, this is my cash ledger. Time of supply refers to the point in time when I have to pay my taxes. Last but not the least, the deemed supply. The concept of deemed supply is overriding factor, where it says your generally accepted accounting principles is on one side, section 12, section 13 is on one hand. In between generally accepted accounting principles, in between your provisions of time of supply, you have one provision called your deeming fiction, deemed supply. Where they say provisions of section 31, time limit of 6 months is there. I'll explain when I come to the respective slide. Section 143, which deals with your job work. What would be the time of supply for payment of taxes? So when I read this topic called time of supply, all these are the interconnected topics which I read for understanding purpose, right? So my payment of taxes connected with time of supply. When I have to issue tax invoice, connected with time of supply. What definitions I have to read, I'll explain in a short while. The other provisions, extension of 12 and 13 is read in section 31, read in section 143. These are the provisions what we will read further in today's class. Associated enterprises, all of you are aware under income tax when we deal with associated enterprises. It refers to a provision called section 92A of income tax. When there is a related party transaction, the related party comes into picture by way of a holding a share pattern or control in a company. This is elaborated in section 92A of my intro taxing. So as per that, they say any enterprise which participates or directly or indirectly controls one or the other intermediary or their management or their control by way of a capital, they are deemed to be associated enterprises. Why this term associated enterprises is important? In relation to associated enterprises, reference to payment for reverse charge mechanism is not important or is not connected. So generally, whenever we talk about reverse charge mechanism, we refer to one aspect called payment. We refer to one aspect called payment. The exception to this reverse charge is overwritten in associated enterprise case. Next definition, reverse charge. Reverse charge. Vignesh sir would have explained when he talked about this aspect called supply and levy under GST. So when we talk about reverse charge, law says that recipient of goods or recipient of services. This recipient is identified as a person instead of supplier. For what? For complaints under 9394 for payment of taxes. Sorry. For payment of taxes. For payment of taxes. Is it only for payment of taxes? Answer is additionally for documentation called self-tax invoice. Self-tax invoice. So here, this time of supply is connected with your reverse charge mechanism provision, where my payment of taxes under section 49, disclosure of this data in your returns, that is your GSTR 3B, for your output tax and for your input tax. For your input tax. For these purposes, we will study the provisions of reverse charge mechanism. Then, continuous supply of goods. This is one definition which is discussed in your time of supply only for goods in a different fashion. Where they say, it is a supply of goods which is provided or agreed to be provided under a continuously on a recurrent basis. This is first point. I supply the goods. How do I supply? On a continuous basis or a recurrent basis. Under a contract, whether or not by means of a wire, cable, pipeline. Wire, cable or pipeline. This is a modem of supply. This is a modem of supply. For which supplier invoices the recipient on a regular periodical basis. So I raise the invoice on a monthly basis, quarterly basis, once in 2 months, once in 6 months. This is called periodical basis and includes such supply of goods as the government may notify. Now, there are few cases where goods have to be supplied on a continuous basis. Example, gas, domestic gas, or oxygen in a hospital. When I say domestic gas, all these high-rise apartments, the big, luxurious apartments, the concept of gas cylinder doesn't exist. What they do, they have a gas pipeline like Reliance or ONGC or HP or BPCL. They get into this supply. They say that for your entire, let's say, assuming there are 1,000 apartments. All these 1,000 apartments, they'll not have any gas cylinder. They have a common gas pipeline. So there will be a service provider called HPCL. They come and install their tanker. Continuous basis, the gas gets supplied on the basis of your the electricity or water. The meter reading will be there, and a periodical basis and invoice is raised. This is a reference of my continuous supply of goods. Continuous supply of services. Similar to your previous definition, it is a supply of services provided or agreed to be provided. Now, look at the language. Provided or agreed to be provided. Provided, agreed to be provided. When I say agreed to be provided, I received advance for rendering services. That's called agreed to be provided. Continuously on recurrent basis under a contract for a period exceeding 3 months. Now, in case of goods, there was no reference to period. Only in case of services, there is a reference to a period. Only when the supply exceeds 3 months, then I call continuous supply of services. Where with periodic payment of obligations include supply of services as the government may notify. Example, your internet broadband services, internet services. Now, for a moment, I have BSNL. As with the contract, I say, please give me broadband services on a continuous basis, telecommunication service. It's called a continuous supply. Now, I could have a contract with BSNL. I pay 6 months once my fees. 6 months once my fee. So it is a supply. It is a continuous supply for providing internet services. How it is as per a contract. Now, is it on a recurrent basis? Yes, it is for recurrent basis. Does a contract exceed 3 months? Yes, it exceeds 3 months. Then I call this as a continuous supply of services. This is my definition. Now, in relation to goods, there is a provision called Section 296, which deals with my removal. Where it says removal means dispatch of the goods for delivery or collection of goods by the recipient. FOR, free on road, CAF, dispatch of the goods for delivery to my customer. X works, customer comes and collects the material. Both the cases I call as the removal. Now, I'll give a couple of examples. Before we read section 12, we read section 13, so that you'll understand how we have to interpret and apply these provisions. For a moment, let's assume that there is a seller called Daily Fresh Grocery Vendor. Imagine all of you would have had this big basket or the various dealers who come to the door delivery for selling the goods. Order is placed on 29th January 2023 for rupees 12,800. Money is received including taxes. Goods were dispatched on 1st February 2023. Now, January, it's the fag end of receipt. Like generally, they say 3 days is a turnaround period. Based on the stock availability, I supply the goods. Order is received on 29th January. Money is received all in advance on 29th January. Goods were dispatched on 1st Feb 2023. Invoice to be raised on. Now, as per your provisions of generally accepted accounting principles, though supply need happened on 31st January, do I raise an invoice for 12,800? For the purpose of GST, because money was received on 29th January, dispatch is going to happen on 1st February. When should the invoice be raised? All our discussion, students, we will restrict to GST provisions. Interconnected treatment for my financials purpose. I'll explain in detail how we have to understand these aspects. What if money is paid in advance for future months? Pay now, buy later option. So part of this particular deal, the seller comes with a modus operandi that you pay in advance, avail 10% discount. Now, assuming that I am into this business of supplying goods, I keep a margin of 3 days per supply. Always I try to receive money in advance. I park this money in a fixed deposit for 3 days. I enjoy the interest on this. Then I make a supply to my customer. Assuming I get 6% interest, I pass on 3% to my customer by way of a discount. Now, this is my business trade secret, how I operate with my working capital. Probably In this particular business model, what will happen when money is being collected on advance? You're enjoying that money. What does your section 12, section 13 talks about these cases? Example number 2. Let's take example of this Taj group of hotels. Hotel booking is made on 15th Jan 2023. Saying that I have paid advance of 25,000. I'm going to check in on 15th Feb 2023. So for a moment, this is a day where there is some, say, event for celebration. There's a birthday or maybe anniversary or some particular event. So for the purpose of 15th Feb, the customer made a booking on 15th January. Advance is paid for 25,000. Charges incurred for accommodation and food. Now, this money what was received was an advance for accommodation and also for food. Assuming that, as I said, there is an event which is going to take place. So this particular check-in when I'm going to do, this advance what I have paid is for my accommodation. It is for my food. Rate of GST for accommodation, say it is 28%. Rate of GST for food is going to be, say, 12%. What is the GST rate for accommodation for food? How do we treat this particular advance? On the day when I have received this advance, in my books of accounts, how I am going to do the accounting? Can I appropriate this as my revenue? Now, there is some policy, like in your check-in policy. Policy for refund. Policy for refund. They say no refund within 30 days. No refund within 30 days. Now, as on 31st Jan 2023, assuming for a moment you happen to be a statutory auditor or internal auditor, will you recommend your client that since the money is received, customer is not in a position to claim a refund, please account for that as a revenue? What does the GST law say? When is my tax of my time of supply gets triggered? These provisions we will study when we read section 13. Example number 3. Removal of goods on CAF basis. Goods are dispatched on 28th Jan 2023. Goods are received on 5th February 2023. Acceptance is received on 6th February 2023. Now, for generally accepted accounting principles, revenue recognition. My revenue recognition cannot be permitted when it is on acceptance basis. The acceptance was received on 5th Feb 2023. Sorry, 6th February 2023. GST is applicable for 36,000. What will be my GST disclosure for January? For January, should I call that as a sale? For the purpose of my books, I will call this is a goods in transit. What if goods are rejected on 6th February 2023? Now, 36,000 is my GST I have to pay. Now, the question comes here, for the purpose of GST, if I have to raise a tax invoice, why on removal I have to raise a tax invoice? Now, these are all food for thought, students. When I get into the GST provisions, all these examples will help you to think in depth. How do we evaluate these practical issues? What answer do I get out of my section 12, section 13? Now, when I have to pay my GST on January, 31st January, my GSTR 1, filing my due date for GSTR 1, assuming is 11th Feb 2023. On 11th Feb 2023, I got to know that goods are rejected. My GST payable is 36,000. Should I block my working capital? Should I pay GST or should I issue a credit note? All these are provisions which, again, we will discuss when we deal with section 34, which deals with your credit note. Last example. This is a practical example. Most of us overlook on renting of immobile property. Rental agreement is for 11 months. As for the agreement, 1st April 2020, the agreement is going to commence. tenant has taken possession on 1st June 2020. COVID, tenant took the possession after some relaxation. June was actually the tenant who took the possession. What if possession takes place on 20th June 2020? Possession can happen on 1st June. Possession can happen on 20th June. Now, why have given these two dates? Why I have given these two dates? This is an interconnected provision called 30 days relaxation. 30 days relaxation. Now, in this case, on 30th June, I have to raise my invoice. In this case, I have 20th July, I have to raise my invoice. So when I look at 30 days provision, there is a relaxation. This date of possession is something which we have to keep in mind. Tenant vacates without notice after 3 months. Now, after 3 years, when the GST auditor has come for audit, relevance of negotiations and documentation. Now, GST officer is going to examine your time of supply provisions. When agreement is signed from 1st April 2020, but the tenant is started paying rentals only from June 2020. Now, what does the GST officer has to say? April, May, any demand GST because of rental agreement, or because of money received only will the demand happen? Documentary evidence is something which is very important. Answer for this, we have to have a negotiation, put it in black and white as terms of agreement, and then give it to the GST officer when the department audit happens. And when the termination happens after 3 months. Now, 11 months is a point in time. 3 months is what he is going to vacate. Now, demand for balance 8 months is not ruled out. Officer will say, because you have entered into agreement, you failed to recover money. Though you have not received money, I presume that supply has taken place. Please pay the tax. These are the practical implications with respect to my contractual documents. So, students, let's get into the time of supply. When we talk about time of supply, when we talk about time of supply, section 7, which talks about supply, whenever there is a supply, if I get an answer yes for this question, was there a supply? Then I go further to examine, was there a levy? If I get an answer yes, then I go to time of supply provisions to examine when or what point in time tax needs to be paid. This is covered in section 12, section 13. Section 12, section 13. Section 12 deals with your goods. Section 13 deals with your services. So generally what we do, whenever a client asks a question, first we will examine, does the transaction fit into the provisions of supply as per section 7? If answer to your question is yes, then I'll travel to section 9 to say whether there is a levy, and if there is a levy, whether this is taxable. First, there should be a levy, and when there is a levy, the transaction should be taxable. When the transaction is taxable, when I get an answer as yes, then I travel to provisions of time of supply. This is a backdrop. Time of supply for goods. Time of supply shall be earlier of following. What do they say? Date of issue of invoice by the supplier. The last day is to issue. Date on which supplier receives the payment with respect to supply. Provided that if the supplier of goods receives an amount up to 1,000 rupees in excess of amount indicated in tax invoice, time of supply shall be at the option of the supplier, date of invoice. So here, the provision says, my date of supply shall be earlier of these two. Raising an invoice or date on which supplier receives a payment. Earlier of these two is my time of supply for goods. Now, this provision has been relaxed. From October 2017. So as on today, theoretically it is there, but it is not in existence. This provision says that, look, whenever you receive an amount, up to a sum of rupees 1,000 rupees. When I receive an amount excess of 1,000 rupees, excess of my consideration. Whatever is the amount indicated in my tax invoice. Now, for a moment, I have billed for 1,35,000 as per tax invoice. My customer made the payment for 1,35,600. Sorry. My customer made the payment for 1,35,600. So why did the customer pay 600 extra? Erroneously. There was by oversight, the payment was made excess. Then they say time of supply in this case shall be at the option of supplier shall be date of issue of invoice. Whenever subsequent invoice is issued, that shall be my time of supply. That shall be my time of supply. This is what they say in relation to invoice in relation to goods. Hope this is clear, students. Let's have a break for 10 minutes. We are at 7:31. Let's resume back at 7:40. let us continue with our discussion. There are a few questions. There are a few questions in question window. I'll just take up those questions before we continue further with our discussion. Namrata, I'll take up your question in a while, Namrata. Tirupati is asking this question. Sir, can't we say proviso to section 12, subsection 3? Instead of mentioning all this reasoning, answer is yes, we can say that. Shriram is asking this question. In fact, there's one, Srinidhi and Shriram, both are asking in two different fashion. Srinidhi says, sir, is section 12, subsection 3 drafting error? I think he's referring to this, provided if the location of the immobile property of a boat or vessel located and intended to be located outside India, place of supply shall be location of the recipient. He was asking whether is it a drafting error. Srinidhi, probably, like I don't say it is a drafting error. The intent of the lawmaker is to hold back that the place of supply is in India. They don't want to give the benefit out of India. Probably that could be a policy matter. I don't say it's a blunder. Reason, when we look at section 12, like Janvi rightly mentioned, there are two places. There are two places where if the recipient or if the event is held outside India, identify the location of a recipient. That is, one is in relation to movable property. Second is in relation to subsection 7, organizing or conducting of an event. So in relation to this, organizing a cultural and social event, etc., if the event is held in India, taxable territory, outside India, then they say identify the place of supply as location of the recipient. So that way, Srinidhi, I don't think it is a drafting error in this particular provision. I'm very happy to look at this technical questions from some of you. And Sriram is asking this question. This question number 5, just for general understanding. When we say the service provider is in Karnataka, service recipient is in Tamil Nadu, applying the provisions of section 12, subsection 3, you are saying the place of supply is Tamil Nadu. Assuming for a moment if the recipient is allowed to take ITC, now if recipient is registered in India, question comes here, can he claim the input tax credit? Answer is yes. It's a big yes, because supplier is in Karnataka, place of supply is in Tamil Nadu. IGST, I can very well take the input tax credit, provided it is in furtherance of business. If it is personal consumption, my section 17.5 comes into picture, block input tax credit. Right? And Sriram is asking this question, is the recipient allowed to take input tax credit of the tax portion he has paid to the supplier along with service charges as per his tax invoice? Or since the place of supply is outside India, no ITC is allowed. Now here, Sriram, because of provisions of 12.3, place of supply happens to be Tamil Nadu. So there is no way I have to restrict my ITC. I have to restrict a factory gate. Risk and rewards are transferred. Reference to Sale of Goods Act. When the risk and rewards are transferred, accounting standard 9 says that revenue can be recognized. When I say it is on CAF basis or FOR, free on road, that means my goods till it reaches the factory gate of my customer, risk and rewards are with my supplier. Accounting standard 9 does not permit to recognize my revenue till the customer acknowledges those goods in a good condition. For the purpose of GST, irrespective of Ex Works or FOB, CAF or FOR, I have to charge GST, I have to issue a tax invoice. Hope this is clear, Namrata. Shriram, if you have any further doubt, you can let me know. Srinidhi, I hope I have answered your question. Then there's one particular point. Namrata is asking this. Where is that? I missed this. Okay, Sriram is asking this question. Is it mandatory quote section number and apply the provisions of the section, or is it sufficient if we write answer using common mind? Wherever it is clear, Shriram, please elaborate the section provision. Wherever you don't know, obviously you have to apply common sense. Please go with that. And with respect to section and provision, not compulsory that you have to quote your section number. You can say as per the provisions of IGST Act, as per the provisions of CGST Act. But rule or act, be specific. Don't mess up in that. Now, when we talk about place of supply, don't quote CGST provisions. We have to quote IGST provisions. When I refer to section 12, when I refer to section 13, it is IGST, not CGST. Namrata is asking this question, so please give some tips to remember the section number. Now, for any particular topic we discuss, generally, what we do is we write down the section number and just overview of that section number in a page. So when you're having your working notes, so working note starts here. So in the first page, you can put a heading. This section, this is a provision. Put the section numbers, put the provision. And when you read this particular provisions, always refer to this main page where you have written section numbers. Like a simple example, accounting standards. Accounting standard 1 till 32, we write on a piece of paper. Every day, maybe 5 minutes. 5 minutes. Just get a glance to this particular paper called accounting standards. Glance to a paper where you have written your Companies Act. Glance to the paper where you have written income tax. Glance to the paper where you have written GST. 5 minutes on provisions connected with your capital gains. There are a few provisions which are a mandatory question. You know this is going to be tested for sure. 16 marks. Now, a student who scores 90, a student who score 80. Now, these two people, how do they score? One, presentation. Like Namrata was saying, because of presentation, I got 59. Presentation is something which is very important in your examination. Second, write down these provisions in a piece of paper, paste it somewhere in your room where you study. Every day, make a point. 5 minutes, you read through that paper in detail. Like maybe 10 pages, 10 minutes. 5 pages, 5 minutes. But glance through. If you make this habit for 3 months, no way you can forget your section numbers. This is a tip for you, Nanutha. Coming back, provisions of section 12. Now, they say, as per provisions of section 31, I have to issue a tax invoice at the time of removal of goods or supply to the recipient. Now, I'll explain all these provisions in this way. The provisions of section 12 says, whenever there is a removal, that means goods are taken out of factory. When I say removal, supplier removing the goods or making available of goods, making available of goods. So here we call this as CIF, cost, insurance, freight. Making available, I call this as FOB, free on board, or X verbs. CAF or FOR. These are the commercial terms. Examination, this terminology is good enough to take away 3 marks. Read carefully the given transaction. So when they say removal, when supplier is removing the goods, they should have a tax invoice. When customer is buying the goods, there should be a tax invoice. So that means to say, tax invoice under section 31 is compulsory. This will be my time of supply. For a moment. 1st April till 30th April. 1st April till 30th April. Now, assuming on different dates, I have raised 120 tax invoices. 120 tax invoices. Now, out of this 120, I bifurcate this way. Say 90 are CAF, 30 are FOB. I repeat, 120 invoices I have raised in the month of April. Out of this 120, 90 invoices are meant for CAF. When I say CAF, my accounting standard 9, revenue will not be recognized till the customer acceptance comes. So for the purpose of GST, it is irrelevant for us. 30 invoices are raised for FOB transaction. That means I made goods available, customer will come and pick the material from my factory. Out of this 30 FOB invoices, 25 customer has picked material. 5 are pending in my factory. Now, this is a actual data. So when I raise 120 invoices, 90 cases I have to deliver the goods are dispatched. Out of 30 cases, 25 cases customer came, pick the material. 5 cases customer is yet to pick the material. Now when I have to report these transactions in my GST, then my section 12 time of supply comes in picture and says report all. Now here though my 5 invoices are pending, material is pending in my factory, because I raised a tax invoice. Remember, removal. What do you mean by removal? Supplier has removed the goods, or I made goods available. Customer has to come and pick the goods. Because I raised my tax invoice, I have to report all these transactions in my GST portal. So this data will flow into my GSTR1 and GSTR3B. This is my crux of section 12. Examination at best. This will be tested for 3 marks as examining the time of supply. They'll give you value. They'll give you place of supply. On the basis of this, maybe rate of tax. On the basis of this 3 information, we have to calculate tax to be paid. As per section 12. Under section 12, what is the tax needs to be paid? Please don't get confused. Because I raised invoices, material were not dispatched. My definition of removal says removal can happen by the customer, removal can happen by the seller. However, because I raised a tax invoice, I need to report all these invoices. Let me see if there are any doubts before I go back. I continue further. Okay. Sriram says there is an issue with video getting stuck. Other students who are watching this video, please let me know. Is there any issue with this video? Like, are you having any technical issue where video is getting stuck in between? If it is there for all, I'll escalate this to the technical team. Sriram, I'll just wait for a couple of students' issue. If it is common for other students, definitely I'll take it with the technical team. Huh? Let's come back. Other than this, there are no other doubts. Now, this is a relaxation with respect to advances. As on today, students, any money received in advances, no need to issue a tax invoice. When will I issue a tax invoice? Only when goods are removed, I have to issue a tax invoice. So this is an exception. Advances for goods, no tax invoice. This is what we need to understand as per provisions of section 12. Now, this is what I've explained by way of example. I have CAF transaction, I have FOB transaction. Removal is linked with my section 31. Whenever removal happens, whenever delivery happens, I have to issue a tax invoice. There is no time limit relaxation given under section 31 for goods. So as on today, whenever goods are removed, I have to mandatorily issue a tax invoice. Now, there's a concept of revised tax invoice. There's a concept called revised tax invoice. I'll explain this revised tax invoice with an example. See, this revised concept of revised tax invoice comes with a registration status of a supplier. Say, for a month of, assuming this is 1st to 30th of April. This is my April month. Last financial year, say, this is my financial year 2022-23. This is April till March. This is new year, which is getting started from here. This year, assessee feels that aggregate turnover is reaching the threshold. Means to say, he has to get registered for various reasons. Section 22, there is a turnover limit. Section 24, there is a mandatory or compulsory registration. Now, because of various reasons, assessee feels that on 1st April, he has to apply for registration. Registration to be applied. Now, for a moment, let's assume that 1st April application. Now, on 30th April, for a moment, let's assume that registration is approved. Registration is approved. Now, from say 2nd April, 5th April, 10th April, these three dates, he made a supply. Now, question comes here is, when the supply is made, can a tax be collected? Tax be collected. I applied for registration. I have applied for registration. When I issue a tax invoice, can I collect tax from customer? Answer is no. No up till 30th. That means till registration is given, till registration is sanctioned, I cannot collect tax from my customer. Now here, once I get my registration on 30th April, law says that as per provisions of section 31 and 32, as per provisions of 31 and 32, I can issue an invoice for revised tax invoice. (31) and 32. I can issue a revised tax invoice. For what purpose? For collection of tax. For collection of tax. So why do I have to collect tax? Now, when my registration RC is issued, it says with effect from 1st April 2023, registration is valid. Now, when I say registration is valid, when was this sanctioned? My registration certificate, my GST registration certificate is given on 30th April 2023. But since there are 3 supplies made on 1st, 5th, and say 13th, these 3 days I made a supply, this concept of revised tax invoice comes into picture and say, don't worry, within 30 days of the sanction, you can issue a tax invoice called revised tax invoice for all these supplies. This is the concept of my revised tax invoice. That means to say, when a registration certificate is sanctioned, first you open the certificate. Is the certificate applicable from that day or from any of the previous day? If it is applicable from any of the previous day, and from that day till this certificate issued, if there are any supplies, I have not collected tax. Because I have to pay tax to the government, I issued this tax invoice called revised tax invoice. Hope this concept is clear, students. Okay. Video is stuck. Namrata says, Tirupati says, maybe video is buffering issue. Set it into auto mode for continuous click. Sriram, I think some internet issue at your end, ma. Janaki and Tirupati, no, they say it is not issue. So just check once again, ma. Namrata says video is stuck. Let me check. I'll escalate this to the technical team. Ashok is there, backend, who's actually monitoring this. I'll pass on this to Mr. Ashok and I'll ask him to have a check. And anyway, students, like this session, the way you are viewing, someone from Board of Studies also is viewing parallelly along with us. So when they view, always they let us know if the audio is not proper or if their video is not proper. But again, I'll make a point. I'll escalate back to Mr. Ashok, who is a technical support team member, to check once when there is an issue. Coming back. Now, there's another interesting concept called approval for sale or written basis. This is as per section 31. This is as per section 31, where the time limit for issuing a tax invoice. Now, I have said that whenever we talk about removal, there is a tax invoice which is mandatory, Now, for this, there is a exception. What is the exception? Sale on approval basis. So in these cases, instead of a tax invoice, I use a delivery challan. For the purpose of sending the goods for approval. So here they say, if the invoice is issued before 6 months, the time when the invoice, before or at the time of supply, that is whenever an invoice is issued, that shall be my time of supply. 6 months from the date of such removal, whichever is earlier. If invoice is not issued before 6 months, the point when 6 months gets over from the date of removal, that shall be my time of supply. This is what they say. I'll explain this with a small example for a better understanding. Let's take example of, say, Malabar Jewels. Malabar Jewelry. So this jewelry shop, they have premium customers. Where we can also call them as celebrity. So here, assuming for a moment, Malabar Jewelries, they are say registered in Kerala. They send 30 lakh worth jewelry to Mr. A on 1st Jan 2023. Now, Mr. A happens to be a celebrity. Now, usually, they know that they cannot question the celebrity. Sir, when you will send back? Sir, do you want to retain this? Now, these questions, they cannot put to the celebrity. So here, when I say it is on sale on approval basis. Why do I call sale on approval basis? Celebrities, generally, they don't come to the stores. If they come, they know that the market gets stuck and the shop sales also will get hampered. So for that sake, the items travel to their residence purpose. So here, when this 30 lakhs jewelry has to be sent, tax invoice will not be issued. What I have to issue? Delivery challan has to be issued. On delivery challan, I make a disclosure that these goods are meant for sale and approval under section 31. So here they say 6 months. So 1st January 2023 to 30th June 2023. This is a span of my 6 months. They say, supply can, if an invoice is raised, scenario 1, scenario 2. If invoice is raised before 30th June 23, this is my time of supply. So what happens if I have not raised invoice till 30th June? Then 30th June 23 happens to be my time of supply. Let me see if there are any questions. Let me see if there are any questions. Janaki says we have faced the actual situation of time of lockdown in our factory where we have made invoices on FOB basis for exports, but due to lockdown, customer did not pick the material, which gets okay. So that we had to make understanding to statutory as the financial year was changed between invoice. Very tough time, Janaki. I completely agree with you. So like people who have familiarity with the customs and GST provisions, we can understand. Especially when in the GST officers, we have to make understand very, very tough time because they don't understand our generally accepted accounting principles, auditing principles, accounting standards, NDAs, all these aspects, they don't even understand. Good. So we'll go further. Now, continuous supply of goods. So in case of continuous supply of goods, they say, what is my time of supply? Whenever we talk about continuous supply of goods, I gave example of your domestic gas, which is used by, supplied by BP or HP, etc. Whenever there's a successive statement of accounts or successive payments involved, either I issue a statement every month, I give a statement, maybe 25th. Then the moment statement is issued, that is my time of supply. Or whenever successive payments are involved, I say every month you keep paying 2 lakh. You keep, like example. So for domestic gas, every month you pay 1,000 rupees. At the end of 10 months, I calculate and I examine. So here, where there is a successive payments, that is my time of supply. If a statement is given, that is my time of supply. In this case, they say my tax invoice shall be issued before or at the time of each statement is issued, or as the case may be, payment is received. So if money is collected, issue a tax invoice. If the statement is issued, collect a tax invoice. Now, cases where they say, sir, you keep paying some thousand as a goodwill gesture, at the end of 12 months, you will see. Now, if that is a contract, whenever a payment is received, please raise a tax invoice. Now, reverse charge mechanism. All of us are aware, reverse charge mechanism. There is a notification called 3 of 2017, which deals with your goods. So wherever, like example, say there is a tobacco leaf, or there is a cashew nuts. Now, these are some examples where tax has to be paid on reverse charge for goods. So here they say, my time of supply shall be earlier, like your income tax TDS, either date of booking or making the payment, whichever is earlier. Similarly, like because goods are tangible, point number A, the date of receipt of goods, So how do I get to know? Based on security gate entry or date of accounting in my inventory. In my inventory books. Date of payment as entered. Now, date of payment, either receipt of goods or date of payment. Before receiving the goods, I make a advance payment to my supplier. If goods are not received, advance is not paid. Then 30 days immediately, date immediately following 30 days from the date of issue of invoice. So if the invoice is issued on 1st Jan 2023, my time of supply happens to be 31st Jan 2023. This is my time of supply. So in case of goods, they say physical receipt. Whatever receipt is there, either this or making an advance payment, to supplier, or 30 days from the date of invoice. Earlier of these will be considered for my time of supply. Examination, what can we expect? A problem based on the detailed transactions. What we will do at the end of today's discussion, I'll give a couple of examples. Like, you have to read before we solve the problems. I'm explaining the concept. You have to supplement this listening by reading once the provision. Once you do your homework, next class again, I'll take a recap with some problems. Time of supply for goods. I have explained this. Now, there is something called vouchers. There is something called vouchers. Voucher is an instrument. Voucher is an instrument. Now, for an example, say most of us have this Friday funders. Now, this generally happens in our office where every Friday we have a discussion. One of the student or one of the article or one of the office personnel makes a presentation. When the discussion happens, the person who performs more, they'll be given something called gift voucher. Gift voucher. This gift voucher will be for rupees, say 500. Say rupees 500. Now what we do, we have a bookstore called, say, Sapna Book House. Now this particular book house is meant for all my CA curriculum books. So any student who wanted to buy any book in relation to CA, CW or CS, CMA or CS, they go to this shop, they get this particular book. So we say to the shop owner, please give me a voucher for rupees 500. And whenever a person, like any of my student comes with this voucher, kindly redeem this particular voucher. Now here, what is happening here? A voucher is nothing but an instrument where there is a value of money. This cannot be called as a credit card. This cannot be called as a debit card because I cannot go to an ATM for withdrawing money. Rather, it is an instrument where I can use this instrument for the purpose of buying goods or buying services. In relation to goods, they say, in case of a voucher, the time of supply will be date of issue of voucher if the supply is identifiable at that point. If identifiable at that point. So that means to say, I print an voucher. I say that 15th April till 30th April, this voucher is valid. If you go to that shop after 30th April, they say, Praveen, this voucher is invalid. You cannot encash. Now, what is happening here? I fix a particular time so that the voucher can be encashed only in that point in time. So if that date of supply is known, that shall be my time of supply. So what if it is not known? Then date of redemption. The point in time when I go to the shop for buying this particular books, that's called my time of supply. This is my time of supply for vouchers. Now, this is an ancillary provision where in an investigation, in an audit, if some transaction comes into picture where my issuance of a tax invoice doesn't take place or the conditions of reverse charge mechanism does not come into picture. So to answer some of future events, this is an ancillary provision. We don't anticipate what may happen in future. For that purpose, they say, in time of supply, where 12.1, 12.2, 12.3, 12.4, none of them have clarity. On the basis of periodical returns file, the date of such return shall be the date of supply. That is the tax I have to pay. So when I don't know what is a particular provision to be applied for a particular transaction, the day you file your return, that shall be considered as my time of supply. This is an ancillary provision. Next, in relation to interest, penalty, late fee, etc. You would have, I don't know how many of you have done an audit of a wholesale dealer. Let's take example of Asian Paints. When Asian Paints supply their paint in the market, they don't sell directly to the customer. B2C doesn't happen. B2B, like Asian Paints sells the paint to the dealer. Dealer in turn sells to the end customer. Now Asian Paints say that whenever I sell this goods to a dealer, standard credit period is 30 days. So if customer doesn't make the payment within 30 days, I see interest will be charged or late fee will be collected. So whenever there is a consideration received by way of interest or late fee, they say my time of supply will be date on which supplier receives the payment. So assuming I have to receive a sum of rupees 30 lakh from a dealer. This dealer, instead of making payment on 30th day, he made the payment on 45th day. So when he makes the payment, my accountant says, sir, you have to pay 31.5 lakh. So when he makes the payment of 31.5 lakh, it will be too high. Let me say 30.2 lakhs, 30.2 lakhs. So this 20,000, whenever he makes the payment, that particular day is my time of supply. Whenever customer makes the payment of that 20,000, that shall be my time of supply. Now, this is just one particular slide I have taken. This is a slide which is there in our background material issued by Institute of Chartered Accountants of India. For post-qualification for Chartered Accountants in practice, they have come with a background material for GST audit. So from this particular background material, I have used this particular slide for the purpose of understanding. So any of you, when you search on Google background material of ICA, GST, you will get this particular material. So here they have made a clear bifurcation. What is the money? What is a voucher? What is a loyalty point? Money is as good as a credit card, debit card. Voucher, I gave an example where like if a student is performing well, we give a out of token of appreciation, a voucher, which he can go to a particular shop and redeem. Loyalty points is on the other hand, like a credit card or a particular hotel. I'll give an example of credit card. Say for a moment, I hold a credit card issued by, say, ICICI Bank. ICICI Bank says, Praveen, when you spend more than 2.5 lakhs, I give you something called loyalty points. What can I do with that loyalty points? I can use it for repayment of my credit outstanding. One example. Second example. Say I have something called this Shell petrol bunk card. When I fill fuel in Shell or BP or HP, they give something called their own card, Shell petrol card. So when I use this petrol card, every time I fill petrol for 1,000 rupees, they give me a concession of 2.5%. So that means every time I fill 25 rupees, it gets back to me as a loyalty points. I can use that loyalty points for payment of cash, that is petrol bill, or I can use it for purchasing coffee or tea from their Shell outlet. So loyalty points are the points which can be redeemable for future purchases. So this is a differentiation just for your academical interest. Examination, no one is going to ask in depth on loyalty points. Let's move further. This is again an example. I have picked up this example based on the previous slide. This is just for your understanding purpose. Now, we will examine these provisions of place of supply in this example. Invoice is raised prior to removal. Say invoice is raised on 10th October 2020. My invoice due date is 20th October 2020. That means customer is going to come and pick the material on 20th October. But I raised invoice in advance on 10th October 2020. Payment is entered in my books on 26th October 2020. Now here I have three transactions. But that is the date I have raised invoice, the actual date I should have raised invoice, the day when I have received my money. Credit in the bank account, this money I have got credit on 30th October. What is my time of supply? Here, as per the provisions of section 31, whenever I raise an invoice, that is my time of supply. Though the invoice is due on 20th October, since I raised an invoice on 10th October, this happens to my time of supply. Next, example number 2. Advance received. Advance is received on 30th October 21. Invoice due date is 20th October 2021. Payment entry happened on 10th October and money got credited into my bank account on 30th October. So here, since for the advance received, I have to raise invoice on 20th October. I need a delay of 10 days, that is till 30th October. Instead of raising on 20th, I raised the invoice on 30th October. So here, now how do I get to know? On the basis of removal. On the basis of removal. Money is received in advance. Though money was received on 10th October, my removal happened on 20th October. But actually, I raised invoice on 30th October. In this case, provision says, I will not take this date into consideration. Though you have defaulted, I will set aside this date and I'll consider 20th October as my due date for time of supply. Examination. 1 mark MCQ can be expected on this background. Now, looking at when we present this data in a detailed fashion, easy to understand. The same example, the second line, if I have to write in English, 5 lines I'll take. Why do I do that? To confuse you, to create a tension, we write it English in 5 sentences. Thus, we have to make a detailed presentation in a suitable fashion to decipher your interpretation. Third one, invoice raised after removal. Say, my actual removal happened on 20th November, but I raised my invoice on 30th November. Payment I have received on 16th November. It got credited in my bank account only on 30th November. Now here, though money was received on 30th November, goods were removed on 20th November, invoice was raised on 30th November. Provisions say that my time of supply is 20th November. Since you have defaulted, I don't take this into consideration. 16th November is irrelevant for me for goods. This is my answer for time of supply. Now, before I go into time of supply for services, I'll just see if there are any doubts further. Okay. Namrata says, please explain the advance point. Now, this is a point I was explaining. Let just me erase this point. This advance point, I'll explain Namrata once again. For a moment, I have received money on 10th October. Probably I have put into bank belatedly, which got encashed on 30th October. Now, on receiving money, goods were dispatched to my customer on 20th October. But accountant has raised only on 30th October my invoice. Now, in this case, what will be my time of supply? Definitely, as per provisions of Section 12, my money received in advance is irrelevant for me. Removal is something which is relevant for me. Removal happened on 20th October. My invoice was raised on 30th October. In this case, provision says that because as per Section 31, read with Section 12, removal is relevant. My delay in raising invoice is irrelevant. Accordingly, this happens to be my time of supply. Hope this is clear, Janaki. Let me know if you have any further doubts. Sorry, Namrata, hope this is clear. Great. Let's go further. Time of supply for services. Now, having understood for goods, services is pretty easy, except the reverse charge and this advance portion. Now, in relation to time of supply for services, as income tax says earlier, whichever is earlier. What is that? First point, date of issue of invoice. Date of issue of invoice by the supplier. If invoice is issued within the period, they say my time of supply shall be date of issue of invoice if invoice is issued within the period prescribed under Section 31, or date of receipt of payment, whichever is earlier. There is a reference to Rule 47 where my date prescribed is 30 days. My date prescribed for issuing an invoice is 30 days. Now, I'll explain this by way of an example. Provision of service. From there, I have a time limit of 30 days. Assuming for a moment, my provision of service is on 30th June 2022. On 30th June 2022, I have done my audit. Now, I'll give a better example rather than this. Most of us, you would have done bank audit. Assuming for a moment, 12th or say 15th April 2023, I have completed my bank audit. Now, when I have completed my bank audit, as per the GST provisions, they say the time of supply will be tax invoice or advance, whichever is earlier. With respect to tax invoice, they refer to this provision saying that I go as per tax invoice only if my tax invoice is raised within 30 days as per from the date of provision of services. So when I say 15th April 2023 is my bank audit completed, my last day is, assuming for a moment, 30 days happens to be 15th May 2023. That means before 15th May 2023, I have to issue my tax invoice. Now here, in this case, say my tax invoice is issued on 10th May 2023. When I have issued a tax invoice and say date of payment. My date of payment, say banker has made payment on 20th May 2023. Now, in this case, as per the provisions of section 13, it says earlier of these two, 10th May, 20th May. 10th May happens to be my time of supply. Hope this is clear, students. Provision of service from there 30 days. How do I get to know this? Rule 47 says, as per GST provisions, law gives me 30 days time limit for raising a tax invoice. Let me see if there are any doubts. Srinidhi is asking this question. Sir, why 30 days? Okay. There are few aspects which generally we brush off, saying it is a policy of the government. But generally, it so happens, Srinidhi, whenever an invoice has to be raised, the government also knows there are some practical issues for raising invoice on timely manner. Like example, in case of a software company, when I have to raise an invoice, the service recipient says, along with your invoice, please ensure that you get a approved timesheet. Like example, say if I have to work for Wipro, if I have deployed my team for 10 days to Wipro or a monthly basis, there is a GST audit being done for Wipro, I have to help them for GST assignment. So it's a contract for 3 months. Whenever I raise an invoice, Wipro says, Praveen, there is a system for raising invoice. What is that? First, there should be a work order. In work order, there should be an amount for which you can raise an invoice. And every invoice you raise, there should be a timesheet. How do you raise timesheet? You have to punch in the number of hours. That will go to the reporting manager. Reporting manager approves. You get that back. Raise the invoice. In case if PF ESA is applicable, remit PF ESA, attach those challans, give you a bill. Now, all these practical aspects requires 10 to 15 days point in time. So government felt, let's give 30 days as a cushion period. So this could be one of the reason, Srinidhi, why they have given this 30 days point in time. Now, clause B, it says, date of provision of service, if invoice is not issued under 31 or date of receipt of payment, whichever is earlier. So here they say, if you issue within the period, invoice or payment. If you don't issue invoice within the period, I don't take this into consideration. Date of receipt of payment is something which I take into consideration. Now, here, provision of service, date of receipt of payment, whichever is earlier. I take this or this into examination, whichever is earlier. So invoice is not required. The day provision of service happens, this is important. Question comes here, sir, how do I know provision of service? Documentary evidence. Documentary evidence. Like example, when we talk about documentary evidence, I'll give a couple of examples. So when we are doing a tax audit, date of signing. When we filing ROC filing, date of upload. Say any departmental representation. Now, date of personal hearing. Now, these are some of the dates which is a documentary evidence to prove how we will refer it to my time of supply. Date on which recipient shows the receipt of service in his books in case where A and B does not apply. Where provision of service is not there, issuance of invoice is not there, date of payment is not there. In all these cases, look at the recipient. The day of accounting in the books of recipient is taken into consideration for my time of supply. Now, I have mentioned that my date of issuing invoice is 30 days. As per Rule 47, for all business, 30 days is a time limit. For banks and financial institutions, 45 days is a time limit. Now, this is a gap for provision of service. Provision of service till actual issuance. This means government has given 30 or 45 days for raising an invoice. Now, like your goods, when I receive money in advance, if I receive money, like I have billed for 56,000, I got money for 56,800. Why 800 was paid, sir? Erroneously it was paid. So when I receive money more than a tax invoice value, up to sum of 1,000 rupees, my provision says I can choose as a supplier. It is my choice when I can raise a tax invoice. Now, a deeming fiction. Now, this is little important. This deeming fiction is important, where it says the supply shall be deemed to have been made to the extent it is covered by a tax invoice, or as the case may be, payment. They say that whenever a tax invoice is issued or payment is received, there is a deeming fiction. This deeming fiction says that supply has been made. It is completed. Now, why this artificial fiction comes into picture? Constitutional right, Article 265. Tax cannot be collected without authority of law. Unless I deem that the supply takes place, I cannot collect tax. For me to get a authority for collection of tax, this deeming fiction was brought into picture. Now, when you get into litigation, when you get into years of practice together, when you read in between the lines, when you make a representation before High Court or tribunal or appellate authority, that point in time, you understand these provisions. Why this word is presented this fashion? Why explanation was brought in? What if explanation is not there? What is the strength of a section because of explanation? All these are interpretational issues. Now, like your goods, continuous supply of services. Like I gave example of BSNL broadband service, your internet service, or DTH, direct to home services. In case of a continuous supply of services, what is my time of supply? Where due date of payment is ascertainable. I have a contract. They say every month you pay 1,000 rupees fixed charges. So if I have fixed charges ascertainable, that is my time of supply. Where the payment is not ascertainable from the contract, invoice will be issued at the time where supplier receives the payment. So here, wherever the payment is due, that shall be the date where invoice is issued and that's the time of supply. Sir, if there is no payment ascertainable, then whenever customer makes the payment, that should be the point where time of supply gets triggered. Where the payment is linked to completion of event. Now, in case if there is a event, completion of an event, generally accounting standard 9, my revenue recognition is connected with completion of service. So similarly, section 13 also says, go for revenue recognition or time of supply on completion of event based. So as per your contract, there is a milestone. For every milestone, irrespective of the payment, please raise a tax invoice. Reverse charge. Now, in case of goods, I had 3 cases: physical, tangible, where I have received the goods. In case of service, because it's intangible, the clause A is removed. So here they say date of payment as per the books, or date immediately following 60 days. In case of goods, this is 30 days. In case of services, date immediately following 60 days is my time of supply. So in case of reverse charge, when we talk about security service, when we talk about renting of motor vehicle, when we talk about say import of services. So all these cases, they say the day you have made a payment to the supplier of service, that will be my time of supply. Or 60, date immediately following 60 days from the date of issue of invoice, that shall be my time of supply. Very simple. Just we need to remember 30 in case of goods, 60 in the case of services. So what if A and B is not there? The date of entry in the books of recipient of supply. The day I have accounted that expense in my books of accounts, I didn't make the payment, I didn't receive the invoice. The day I recognize this particular transaction, that shall be my time of supply. In case of associated enterprises, as I said, payment is irrelevant. The day I book the entry or the payment, whichever is earlier, my time of supply gets triggered. Like your time of supply, income tax, either booking of entry or making an advance payment, whichever is earlier. Similarly for associated enterprises, like your related party transaction. My head office is in Singapore. When I receive a particular bill, I'll take an example. Let me come to a new screen. 30th March 2022. I made a provision. For what? Say technical service. I made a provision for technical service. 5th April 2022. Actual bill has come. Now, for the purpose of GST, my time of supply shall be provision rather than waiting for actual bill. Because I made a provision in my books for associated enterprises, this will be my time of supply. Assuming I made a provision for 50,000, my bill came for 54,000. What I will do? The balance 4,000, I make a time of supply on the date of booking on 5th April. This is my scenario number 1. So what if instead of 54,000 on 45,000 is my bill amount? Unfortunately, like either you can claim a refund or you can say to the government, look, I have paid through cash ledger, claiming this is an input tax credit. This is a revenue neutral transaction. The right mechanism, when you are paid excess tax, claim a refund. This is an actual process. So what if I don't claim a refund? It gets into litigation. Principle of revenue neutrality. Based on this, I can argue, I am not going to lose, you are not going to lose. Don't raise any demand on this amount. Now, in case of vouchers, like goods vouchers, like what if I have given a voucher for, say, Amazon, or let's take example, the Board of Studies is conducting an online exam. I have to pay a nominal fee of 1,000 rupees. My principal says, Praveen, I'll give you a voucher for 1,000. Like I buy a voucher as a principal from ICA, I give it to my student. So in case of vouchers, if the date of issue of voucher is there, that is my time of supply. So ICA says 15 April 2022-23 is the accounts exam. So this voucher has to be redeemed on 15th April. If I know the date, that is my time of supply. Sir, if I don't know this date of redemption, if I don't know when this voucher is going to be issued, then when actual redemption happens, that is my time of supply. This I have explained for goods, same provision is relevant. Now, section 14 deals with your change in rate of tax. Change in rate of tax. I'll explain a problem, example, then I'll come to the concept. 18th July 2022. 18th July 2022 is a date where 47 GST Council came into picture. Council decision was brought into picture. 47 GST Council decision was brought into picture. I'll give an example. One of the example is rate of GST on accommodation service. What they have done, accommodation less than 1,000 rupees is exempted up to 17th July 2022. Taxable from 18th July 2022. Now, this was the effect of 47 GST Council meeting. Let's make an assumption. So there is a hotel called ABC Limited. ABC Limited. 1st April or 1st July 2022, advance was paid. Advance was paid for rupees 10,000. Stay period is say 15th July to 24th July. 15th July to 24th July. 15th July to 24th July. Now, question comes here. There are three aspects called tax invoice, receipt of payment, then provision of service. Provision of service. Now, this is one practical issue many of the industry had, how to deal with this particular scenario. Section 14 comes as a savior. It comes in to explain how do we deal with rate of tax, change in rate of tax. So here, tax invoice to be issued, or receipt of money, or provision of service. Look at these three activities. So here I can call this change point as this. This is old regime. This is new regime. Old regime, new regime. That means to say till 17th July 22, from 18th July 22. Now, this is where the government has come in to explain the provisions of Section 14. So here, wherever there is a change in rate of tax, wherever there is a impact of rate of tax, they say this impact, it is going to have effective from a particular date. this impact is going to be from a particular date. Identify this particular date, examine these three provisions, examine these three events. If any of these two events happen in an old regime, then old rate will prevail. If any of these two events happen in a new regime will prevail. So here, in this example, customer who paid 10,000 per day, it's 1,000 rupees. 10 days into 10,000, say 10,000. So for 10 days, I have paid in advance on say 1st July. My hotel has issued a tax invoice. My hotel has received money on 1st July. The actual provision of service is happening from 15th July till 24th July. 15, 16, 17, old regime. 18 till 24, new regime. So here, section, look at from customer's point of view. Customer says, sir, you say 10,000 is the charges. I am not going to pay penny extra because you didn't say taxes are extra. Now, this is a bargain this is a disturbance which is going to happen in the industry. So considering these factors, section 14 was brought in to examine whether should I go to old regime, not to pay tax, should I get into new regime, pay tax. This is what the provision explains. In case if an invoice is issued after new regime, in case provision is happening after new regime, then I have to charge GST. But in these cases, my provision of service happened on 15, 16, 17. Money was also received prior to that. No way tax can be collected. In second case, in the other, 18th July till 24th July, tax invoice was issued already on 15th July. My receipt of money happened already on say 1st July. So here, section 14 says, get into old regime, better not to charge GST. This is what explained in section 14. I'll come to the provision. I'll explain you this provision, then again go back to this problem. So here they say, in case of supply of goods and services, both, which are supplied before the change in rate of tax. So here they say, what if the supply happens before the change in rate of tax? So they explain invoice, payment, and time of supply. So here, assuming there's a change point here. This is my change point. So here, in case goods and services are both supplied before, supply happened before. This is I call old regime. This I call as new regime. So here, there are three elements. Element number 1, supply. Element number 2, invoice. Element number 3, payment. So here, the supply happened in the old regime. What they say? Now, invoice was issued after new regime. Payment was also received after new regime. Date of receipt of payment or issuing of invoice, whichever is earlier. That means to say, here, two events are happening after. So here, new regime is going to prevail. Second scenario. My invoice is issued in the old regime. My supply happened in the old regime. Payment happened after, that is in the new regime. So in scenario number 2, two events are happening in the old regime. What do they say? Date of issue of invoice is to be considered. Since the date of issue of invoice happened in prior to change in rate of tax, my old regime will prevail. Scenario number 3. My supply happened on the old regime. Invoice was issued after in the new regime. My payment was received prior to change in the tax. That means to say, two events, supply and payment, two events happened in the old regime. Invoice was issued in the new regime. So what they say, date of receipt of payment is my time of supply. The day I received my money is my time of supply. When did I receive money? In the old regime. So in this previous case, if I have issued my invoice, if I have received my payment in old regime, then my old regime will prevail. So here, invoice is issued after, supply was made in the old regime, My payment was received on old regime. Since two events are happening, date of receipt of payment, this is applicable. So this is little complicated. How do I know? Don't do anything. Just put these three events. Supply, invoice, payment, and put the change point. Any of two happens before change point, old regime. Any of two events happen after change point, new regime will prevail. Now, this is an example where my supply, case of supply happens after, like in the previous example. So this is my period where my change happens here. This is my change point. And they say, in case of supply of goods or services, have made supply after. My supply is happening in the new regime. This is my old regime. So in case of scenario number 1, invoice was issued, old regime. Payment was received in the new regime. Now, out of 3, 2 are after change in the rate of tax. They say date of receipt of payment, that is new regime will prevail. Scenario number 2. My supply is taking place in the new regime. My invoice was issued prior to change in tax. My payment was also received prior to change in tax. Date of receipt of payment or invoice, whichever is earlier. That means old regime will prevail. In case of this hotel accommodation example, what I have given to you, my money was received in advance. My invoice was issued in advance. Because those supply was happening after 18th July, my old regime will prevail. That means nil rate of tax. I need not pay GST. Third scenario, my supply happened in new regime. My invoice was issued in new regime. My payment was received in old regime. So here, out of 3 events, 2 events are happening in the new regime. Since 2 events are happening in the new regime, my time of supply will be date of issue of invoice. This is how I need to understand. Hope this is clear, students. Let me see if there are any doubts. Section 13 is absolutely not complicated. Very, very easy. Section 14 is very easy. There's one question from Tirupati. Tirupati is asking, sir, why only up to 1,000? If money is received in excess of 1,000, what will happen? If money is received excess of 1,000, what will happen? Now, it's a policy matter, Tirupati. Less than 1,000 rupees of a tax invoice, they say choice is given to the supplier. If money is excess of 1,000 rupees, then in case of goods, nothing to worry, because advance, I'll treat that money as advance, no need to pay any GST. In case if the money is in relation to services, I call that as an advance, my time of supply gets triggered. Then Tirupati is asking one more question. Is part payment received also termed as consideration as receipt of payment? Yes. Money received, part payment, money received in advance, it will be considered as a payment. I have billed for 10,000. I have received for 6,000. So that 6,000 I'll consider as a money received in this bill. Now in case of supply of goods, invoice of issuance of invoice is sufficient. In case of supply of services, since I have issued an invoice, though I have received a part payment, anyway supply has been taken care, time of supply is taken care. This is the answer to your question, Tirupati. Next, moving on, common errors while solving the problems in general when we deal with these provisions. Tax invoice is prepaid, goods are not dispatched at the month end. Janaki was mentioning this particular error issue. Janaki was mentioning this particular issue at the time of lockdown. Tax invoice was prepaid. Why the metal was not moved? Various reasons. Sir, I have prepaid invoice at 5 p.m. The truck was supposed to come at 6 p.m. 7 p.m. the truck has come. Security says no one is there for loading and unloading. So the truck has to wait for next day. 30th April I raised a bill. 1st May the goods are being dispatched. I have to pay tax. No choice. Contract with composite supply. Now when I have a composite supply, where supply of goods, supply of services, both takes care, both happens. In this case, my time of supply is very, very important. Identify for goods, identify for services. Why? Like example, when I receive say 10,000 as an advance, I have to supply raw material. I also have to do installation. Now, this 10,000 is for raw material. Is this 10,000 for services? How do I know? Why? For goods, advances, I need not pay GST. For services, on advances, I have to pay my GST. Then, receipt of money in advance from a customer who has placed who places an order for supply and installation. Now, when money is paid by a customer who pays advance for goods, who pays advance for services. Now, we have to be very specific in the contract. Is this advance for goods? Is this for advance for services? Let there be a intimation from the customer to intimate for what this payment is being made. Next, receipt of money at head office, which is a common bank account. Now, assuming I have a presence in 5 states, say Andhra, Telangana, Karnataka, Kerala, and Karnataka. Now, money was received in head office. Say customer called Wipro makes a payment. Now, this Wipro, when he makes the payment, is it for this state, that state? How do I know? That is a big common issue. Also, when money is received in bulk, how do I know this is for this particular customer? Is it for this particular tax invoice? Unless we have a proper mechanism identifying the customer, identifying the rate of tax, identifying the time of supply, identifying the state where this IGST or CGST or SGST should be charged. A very practical issue. Receipt of amount for mixed supply. In case of a mixed supply, section 8, the rate of tax, whichever is higher, that gets applied. So what if it's a combination of goods and services? So what we'll do generally, whatever is the highest rate is there, that we will identify. Time of supply for goods and services, we have to carefully examine. Now, last but not least, when we talk about composite supplies, if there are goods which attract 28%, if there are services which attract 18%, we have to be very specific, identifying the goods, identifying the services, paying the right rate of tax. This, we come to the end of today's discussion. Before we wind up, let me see if there are any questions. Namrata says, okay, it's clear. Tirupati says 1,000. This is also clarified. Okay. So students, we will have our next session on valuation. That's a little big chapter. One session alone has been allocated. I'll try to cover up to the extent possible entire valuation under one session. Also, we'll have a quick recap of this topic called time of supply for goods and services by way of a problem. My one advice next class when you attend for valuation, I would recommend read this chapter called valuation, section 15, and the valuation rules. Valuation rules will be little Greek and Latin, which I'll explain. I'll help you to understand in detailed manner. But section 15, please read once and also read this explanatory notes in valuation before you attend our next class. So till then, good night, goodbye, see you all.